Hello traders, Gary Wagner here just before 10 o'clock in Honolulu, 3 o'clock in New York on Tuesday, the 12th day of May 2015, and this is the daily report for gold and silver. We do have the precious metals higher across the board. Gold trading up currently almost $10, $9.70, $11.9270. It has had a low of $79.70 and a high of $96.30. Spot gold also currently trading up about $10 on the day, $93.51. Low is $11.80 and the high is $11.9722. Finally, the silver currently trading up about 22 cents on the day. That's with a low of 12 and a high of 16.59 and a half. There is no doubt we do have some outside markets influencing gold, such as higher prices in oil, as well as a lower dollar, a weakening dollar, all contributing to the upside move that we're seeing today in gold. However, the real impetus, as far as I'm concerned, was what happened over in Europe last night, specifically Greece. Greece made the payment that they were scheduled to make. There was some concern as to whether or not they would make that payment. And of course, once we saw that payment being made, we came well off of the lows, although the euro dollar is still very, very strong. Now, in terms of a straight pattern in the markets that we're looking at, specifically gold right now, we did get what is called an engulfing bullish, and that of course is a single pattern composed of two candlesticks, typically looked at on a daily or a weekly chart, in which you have a long green candle engulfing the prior candle itself. However, you would not take this call in terms of a straight signal without getting confirmation, and confirmation on this candle type would be on the following day. You would simply get a higher high and a higher low. It would look something like this crude illustration, but you would get a green candle. That would give you the upside trigger or a buy signal in gold. However, all things being equal, we are still very, very much within this defined trading range. We haven't broken to the upside or downside in gold, as it remains trading tightly, as I said, within this narrowly defined range. So not only do our long-term studies indicate the potential for more sideways trading, when we look at these short-term charts, this being a 240-minute Japanese average chart, you can see that we've got really a ton of false positives. In other words, crosses upon crosses, where it crosses to the upside and to the downside in a narrow span, this being the 6th day of May right in here, so to give you an idea of the time frame itself. And we're getting alternating candle color, although we're getting a series of candles, green and then a series red. Realize that on a 240-minute chart, these series represent a day of trading, roughly a day of trading on each occasion. So we're still looking at this market as it trades, and it is trading sideways. When we look at some of the other markets that we do follow, first of all, crude oil, back over $60. Nice green candle today. Nice upside move in crude light. We talked about briefly about the euro dollar and the dollar. We're looking at our dollar index, and you can see that it is under pressure today. This is that red candle on our daily chart, which takes us to the euro dollar. A euro dollar, although well off of the highs, you can see these highs up here at around 1.128, currently trading at 1.120, so well off of the highs of the day. Coming down is still showing a nice gain on the day, and traders also showing some extreme resilience is the U.S. equities markets. Of course, we saw the Dow Jones Industrial Average down in the futures last night. Standard & Poor's futures down. You can see these lows at around 2080. Markets recouped 15 points off of that, currently trading at 2095. If you look at the candle type, this of course is a daily chart, but the candle type is almost doji-like now, where it is very, very close to the open as the market goes into about the last half hour of trading. In fact, of all the markets that we are following, this is the British sterling, British pound. This had a tremendous rise today, currently trading at 156. And you can see that we've had a continuation off of yesterday's dramatic move, and last week we had a substantial move as this market hit this low roughly at, call it a 151, 150.99 in that area, and has moved off dramatically from that point to move up 6 basis points to these higher prices here. So traders, as we get closer and closer to the launch date of our new expansion, and the expansion is simply the gold forecast as we have been doing this for 5 years, but we are mixing into the fold other markets besides gold and silver, such as the currencies, crude oil, and the equities markets. When we look at silver here, we talked about over the last few days, it's one of the few markets where I actually am beginning to see some bullish signs, some sentiment that tells me we might see higher pricing. Of course, we have a dramatically higher price today as we trade up about 20 cents. We have channel lines that are in here that are really moving to the upside, but they're moving to the upside at ever so slight a upside tact. In other words, it's almost sideways. This would be sideways. So you can see the grade that it has, maybe a 25% grade, 20% grade. But I do believe that we will slowly over time see higher pricing in silver. However, it's still susceptible and will move in tandem with gold. And as long as gold is trading sideways, it's going to be hard, I believe, to see any real spike within the silver market. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.